Welcome back. You're watching us here on Halftime Report. Just the last few moments, we've seen a bit of a surge in the markets, and that's largely led by the Nifty Bank itself. So the Nifty, when we started the show, was absolutely flat. Now currently has moved to the high point of trade. And look at the Nifty Bank. The Nifty Bank currently has moved into the green. What is it that is taking the Nifty Bank higher? Well, pull up SBI, which has recovered from the lows. We have a decent move come by from the lows on Kotak Mahindra Bank as well. HDFC Bank, which is a meatier part of the Nifty Bank, has also recovered about 0.6% from the lows, still in the red. All the major stocks of the Nifty Bank are still in the red, but nevertheless, we've seen a recovery, and as a result of which, the Nifty is now near that 22,200 mark. But that's about the markets. On the equity side, over to Manisha for all things commodities.
Thank you so much for that, Mangalam. And joining me for that is Kunal Shah of Nirmal Commodities. Kunal, hi, thank you for joining us. And I want to actually put complete focus on metals as prices, because we've seen yet another week start on a very dilly-dally note here. You look at copper prices and we are stuck in a range. The China measures have not had a major impact on the prices. And then the markets also are looking at higher rates for longer scenario as well. Aluminum is trading at a one-month lows. Copper, as I said, not doing much. Zinc is an underperformer with nearly 8% of a decline in this year until time. What is it that you look at in sense of macro and individual fundamentals?
Yeah, so first let us talk about the macro fundamentals. On the macro front, Chinese economy continue to disappoint. The data from the China. If you look at Europe, Europe is also slowing down. Germany likely to slide into recession. Japan also not doing great. So if you look at the world ex-India, doesn't look great as far as the demand growth point of view is concerned. So that is basically a major reason why metal prices are not able to move up. And if you look from the metal perspective itself, so we have come to a point where a lot of metals are not going to go down because they are at the cost of production. The one you're flashing right now, aluminum. Aluminum prices are almost at the cost curve right now. From here, any dip or any decline is a great opportunity to buy. So going forward during the year, we are going to see a lot of production cuts will be announced in China. If prices go 4 to 5% below where they are trading right now from here. So that will balance the market eventually. If you look at the copper, the concentrate side of the copper looks quite tight, but the refined copper market is in a surplus. So there is a commodity-specific fundamentals right now. Steel overcapacity in China. The steel production is going to go down in China. So zinc demand is going to go down from here. Refined zinc I'm talking about. But the key remains is the downside from here is going to be limited, because at some time, some part of the year, we are going to see rate cut taking place. So I think next 1 or 2 months, whatever downside we are going to witness in the metal complex, the bottom will be made in next 1 or 2 months. That will be the right time to, accumulate and store it for perhaps second half of the year, where we are going to see post May, June, prices may start, moving up on the macro basis when the rate cut narrative starts playing out. Tapering, maybe, the tapering of bonds in US may be halted. And so the moment you see weakness in the economic data, I think that's the time, you should start accumulating metals. Aluminum is as a cost curve. So I recommend, the downside from fundamental point of view is very limited in aluminum. One should start accumulating, even though it goes down by 3 to 5%, accumulate it, and you will be rewarded in the second half of the year.
As you mentioned, it's not such a great demand when you look at China, Europe, for that matter. How are you looking at the Indian demand? Because markets have been quite bullish within India as well. Do you think the numbers would be strong enough to support the metal prices from here?
Double-digit growth in India, nowhere in the world. So some of the loss of incremental demand growth from China would be made up by India. And if you see India's copper consumption right now at a very minuscule level, we are going to exponentially see growth in the India's copper consumption. We will be 3 million ton market in a matter of say by 2028, 2029. India's copper consumption will grow at double-digit growth rate. Aluminum consumption will grow at digit growth rate from 4.5 million ton to 9 million ton. That is the kind of visibility what we are envisaging for Indian demand point of view. So until something really with all the stable government, stable policies in the place, India will have a double-digit demand growth in all metals.
Kunal, how would you look at the zinc prices, an underperformer clearly, and the way we've seen iron ore prices go down, steel go down? I mean, clearly zinc will look at that galvanized requirement from steel as a sector there. With 8% of a decline already, would you say that the more pain perhaps is in this metal?
See, the problem with the zinc is you don't know what is going to happen to China. I mean, it's China right now at this moment is like a black swan. What's going to happen? You don't know whether the slowdown is going to be prolonged. Because if you see from the FDI point of view, we are seeing a major outflow from China. I mean, nothing positive, no matter how much government is trying or the central bank is trying some small stimulus, rate cuts, reserve ratio requirement cuts. Nothing is helping. So if the Chinese economy continue to worsen, I don't think so zinc will recover easily. Like I said, for aluminum, similar way, the downside from here, maximum 8 to 10%, not more than that. But we need a significant support from Chinese real estate market for zinc to really outperform and move up sharply, which is not present right now. So I would still stay away from zinc. And I will say that the right time to accumulate aluminum, which is the most laggard metal, the biggest size. If you compare all 5 base metals, aluminum is having the biggest size market, but that metal looks relatively much better.
All right, point taken, Kunal. Thank you as always. So aluminum is the top of the list when it comes to accumulating of metals there. The rest of the metals still have some more pain, at least for the next couple of months. India could see double-digit growth, but the other markets still slightly on the weaker side there. With that, it's wrap on Halftime Report. Stay tuned because after the break, we will get you a business lunch for all trades and news.